And I want you to give VP of Business Development, Jeff Hill, a massive hand for coming out. Let's give him a big hand. Thank you, Jeff.
Thank you very much. Appreciate it. Okay.
Right button.
Right button. Okay. How's everyone doing? Good. Good, good. Happy to be here. Happy that there's good spirits in the room. The last time I came up to Edmonton about a year ago was after a infamous Game 7. And everyone walked around, and I guess the best way I could describe it would be everyone was walking around like their dog just died. And so you guys seem to be in much better spirits. So lots of hope still ahead of us. Really always great to be with you guys. Awesome turnout today. Stoked to see you all. The goal for today is really to give you an overview of who 8Twelve is, but ultimately how it can impact your business. And so we've got lots of stuff to talk about today, so we'll just jump into it. We, of course, have been one of your strategic partners for a couple years now, and couldn't be more happy with the results and the value that we get from working with ACN. So I need you to pull all your phones out, please. I'm going to break a cardinal rule of public speaking, and I'm going to distract you all. So if you could please scan this QR code. I promise it's not going to take you to a virus website or anything like that. It's safe. I promise. And then once you scan it and the link opens, I need you to put your phone back down. We'll come back to this. But I wanted this to be queued up because this is our shiny new toy. And I want to talk about the value we hope that it can bring your clients. First off, though, we want to talk about if you're new to the ACN or if it's been a minute, how can 8Twelve help your business? Essentially, Lisa mentioned earlier in her speech, she talked about how we work with 72 different lenders across A, B, and C lenders. There's a slight update there where we're actually with 74 lenders. And so we continually add new ones. Now, for those who don't know, there's three categories of mortgage lending. There's A lending, there's B lending, and there's private lending. Now, most Canadians are trying to get with an A lender. These are the banks, these are credit unions. These are the ones where you're going to get the very best rate. So when you're driving down the street and you see a sign that says mortgages from 4.09%, chances are that's an A lender. So A lenders are going to provide the most value, the cheapest mortgage, the lowest interest. However, there's stipulations for getting approved. Minimum 680 credit score, verified income. Tell me if you guys run into this. A lenders love people like doctors. They love people, nurses and accountants and mechanics, anybody that kind of works 40 hours a week and gets a T4. But if you're self-employed or you're a seasonal worker or you're a small business owner or you're in sales, that can be a little trickier. And that's where a B lender comes in. So you could have a really successful entrepreneur who, the dumb joke I always like to use is a good entrepreneur is really good at not paying taxes. And so if you know any of those people, when they go to the bank looks at them and says, you don't qualify for a mortgage, what are you doing? And so when of course they do, it's just they have their dog on the payroll, they're paying themselves in dividends, they're just using all the tricks. So that's where a B lender will come in, and a B lender is gonna take, oh, that got cut off. That's a little funky, we'll just go back. How do I go back? We'll go back here. So a B lender will take a much more common sense approach to lending. So they're going to look at the actual deposits a client gets. You may also have friends, family, clients who, for whatever reason, have a bit of a credit blemish, and they've had some challenges in life. Life's expensive. They're still looking to qualify for a home. This is where a B lender will take over. And B lenders typically are going to be a little bit more expensive than an A lender. Like right now, a good A rate's in the low 4s. A good B rate's going to be in the high 4s, low 5s. And alternatively, for those clients who might be, have a little bit more challenge with credit and income, that could be, in the 5, 6, 7%. But ultimately, the goal is to try to find a solution for these families. And then last is private mortgages, and private mortgages are never going to be anybody's first choice. They are, kind of that break glass in case of emergency. But all of this is to say, if you sit down with a client and they say, hey, does 8Twelve offer this type of mortgage or that type of mortgage? The answer is always going to be yes. And so that can include things, and we'll talk a little bit more about that in a second. But here's a selection of some of the lenders that we work with. So you see some very reputable, some of the big 5 banks, And then we've got banks like MCAP or Lendwise, who the average consumer may have never heard of, but those are monoline, mortgage lenders. That's all they do all day, every day. And so they have a wide variety suite of products. A lot of the B lenders are where you're going to find your niche products as well. So things like farm lending, commercial lending. I mentioned that we had 74 lenders, and our 74th lender is an interesting one. They are actually a halal lender. So they are Sharia compliant. So if you have clients, friends and family who are devout Muslims, a traditional off-the-shelf mortgage product is not compliant with the tenets of the religion. And so there is now a Sharia compliant lender in Canada. And so just offering those different options for clients is what we try to do. We have a diverse team. So obviously we have a diverse room, we have a diverse country. So if you have to sit down with a client and they're more comfortable doing language in a specific, doing business in a specific language, let us know and we can help facilitate that. This is something we're really, really proud of. So our Google reviews, chances are, your clients have never heard of us. And they're like, who are these 8Twelve guys? Are they criminals? Are they crooks? When they look us up, they're going to see a 4.9 star rating with well over 1,000 reviews. And so, Terrence referenced a few really powerful marketing guys, Simon Sinek and the like. And in digital marketing, having strong Google reviews is what's known as social proof. So, when any of us go on Amazon and we buy a new air fryer or whatever the heck we're getting, you go straight through the reviews and you're like, is this thing any good? And so that social proof is what really earns companies credibility. And so we have that in spades. Oh, thank you. Thank you. Dealing with companies like ACN can be challenging because when you guys set your mind to something, you guys can flood us with volume. And so we're extremely process driven. And so we have a broker team who follows this process every step of the way just to ensure that your client has a consistent outcome of service. And so how that process works is when you submit a referral through the storefront, it's going to be assigned to a dedicated broker. So your client is going to have 2 points of contact. They're going to work with the broker and they're going to work with a dedicated underwriter. And essentially that first phone call that we're going to have with your clients is really just to determine whether there's a deal to be made. Anybody who's been through the mortgage process know that it's not fun. It can be a grind. And so there's a lot of paperwork involved. There's hard credit checks involved. So we try to qualify the client before we take them too far down that path. But if everything's looking good, they move into the application process stage, and this is where we actually will pull credit, start gathering documents. File goes to an underwriter. That underwriter is like a matchmaker. They're going to take that client profile of income, credit, debts, assets, and really try to find the best match for it in terms of a lender that's appropriate. And then we submit that, present that to the client. They work with the lender that makes the most sense for them, and off we go. So going back, we have full residential and commercial options. And so the goal, like I said, with 8Twelve is to really have a solution for just about anybody. So there's a lot of yeses on this screen. There's one no. So we always want to talk about this guy. We get asked all the time, do you guys do like mobile home? Tiny homes are really trendy. Do you guys offer that as a mortgage on that? And the answer is no on this slide, but it should be maybe. Maybe we do. And as it comes to mobile homes, the one stipulation is it has to be secured to a foundation. So if it is secured to a foundation, good to go. If it's on wheels or mobile, not great. So, and it's really just because, if things go sideways, the whole point of a mortgage is that the bank can take over that house and repossess it if, things go bad. Really, really hard to do if the house is on wheels. So, so that's the one thing. Other than that, there's yeses across the board. So the goal is to really have a solution for all of you. Of course, we do a lot of purchase deals, first-time home buyers, new to Canada. We shouldn't even have this one on the slide in Alberta. I apologize, but there's a really cool program in Ontario. If you have friends, family members in Ontario, there's a co-equity purchase program which helps new first-time home buyers really get into a home for an affordable cost, and it's just a shared equity plan. Pretty cool product. But we do a lot of obviously new purchases. Alberta obviously is the one market it seems like in Canada where it's still popping. So if you have clients who are looking to upgrade, we can help. But this is where I think we've brought the most value to ACN. In the last 6 months, we pulled some statistics before we made the trip up today. 44% of the funded deals that we did in the last 6 months were refinance deals. And so we want to take a minute and talk about that. And that QR code has to do with refinancing. Reality is, for a lot of Canadians, we're all struggling with debt. And I was in a training with one of our financial services partners a few weeks ago, and a hand went up and they're like, hey, Jeff, your statistics are outdated. And so apparently this number is now $1.84. So that is $1.84 in consumer market debt for every dollar of disposable income. And so I know life in Canada right now is crazy expensive. You know, we're all struggling just to get by and to, you know, live the lifestyle that, you know, we thought we could live 5 years ago. And so debt can be a huge, huge challenge for a lot of Canadians. And this is where we've been able to bring a lot of value, is by freeing up cash flow and refinancing debt and really just giving Canadians kind of some relief from this. And so, oh shoot, that got jacked up. Okay, I've done this before, so we can get through this. That is weird. Okay, so for this family, they had a $350,000 debt, mortgage on their property, which is pretty modest. They had a $49,000 line of credit. The payments on that line of credit were approximately about $1,100 a month. They also had 4 credit cards totaling $41,000 in debt. And Kevin's making a noise. The big problem with this, and you can't see it on the thing, is they were only making that minimum payment a month. And so it was a $480 minimum payment on that debt. And so this family wasn't really making any headway. They were barely just keeping their head above water. And so, you know, when families are in this situation, it's the kind of debt that keeps you up at night, right? And then it's just, you know, how are we going to get ahead? What are we going to do? And so for that family in particular, you know, they had a $350,000 mortgage, but the property itself, hey, good work, tech team. That's amazing. So thank you. Yeah, round of applause for the tech team. So the home was worth about $600,000. And so that is where that little app that web feature that we showed off, that little calculator, it is designed to work through this with your client. To do a refinance deal, you have to have a sufficient equity in the home. And so that's the first and most important part. So in mortgage talk, it's called LTV. So if you pull out your little calculators, if you have that open, you know, you could say the house was worth about $600,000. The mortgage on that was $350,000. And so we had enough equity in the home. So we were able to execute a refinance strategy. So we refinanced the mortgage at $480,000, which isn't bad, but the downside to that is often is the case when you do a refinance deal, families will re-stretch out that amortization. And the reason they do this is because they're just trying to keep your cash flow positive, their bills as low as possible. And so by stretching out that amortization, you can lower that mortgage payment. However, you're resetting the interest clock. And so that can be a challenge for families. So we refinanced at $480,000. With that refinance, we obviously paid off the original mortgage, but more importantly, we paid off the line of credit, we paid off the credit card. That burden of debt that was weighing down this family was gone. We were, from a cash flow standpoint, we were able to save them an extra $1,000 a month. So just extra, yeah, not bad. Thank you. And in addition to that, they took a cash reserve of $27,000. So oftentimes, families will pull cash out of the property for things like renovations, but it could be like life events, like a wedding, or it could just be like, you know what? This is cheap money. I'm getting this at 4%. I just want, something to put away for a rainy day so that when I need new winter tires, I'm not putting it on the credit card. And so this is the kind of thing we have been doing a lot for ACN clients. Like I said, 44% of the deals we've done over the last 6 months have been a debt refinance deal. And the goal with all of this, I think the common thread of all the presentations, whether that's your utility services or TELUS, is can we give Canadians a product or service that they need while saving them some money, right? And bringing that additional value. And so this is one way I think we can really do that. So the problem when you refinance a mortgage, like I said, is you reset the amortization. And this is where a new strategy has come in that is somewhat new to 8Twelve, is this is the point of that calculator. If we took that $1,000 in free cash flow, and this isn't something you have to educate the client on, but this is something that we've started training our clients on. If they just converted $500 of that into an accelerated payment on the mortgage, that has a pretty powerful compounding effect. For those who don't know, anytime you make an accelerated payment on your mortgage, it goes straight towards principal. So all of us could pull out our phones right now. We could go on our banking app and put 20 bucks on our mortgages. Very few of us do, just because we don't think about it. Life gets busy, life gets expensive, but it is a great way to pay down your mortgage. And so if you were to do that, $500 a month would be, pretty easy math, $6,000 a year, or over the 5-year term, which most Canadians do, 30 years towards principal. Sorry, 30,000. If the client were to do this, the mortgage would be paid off 8 years earlier, and they would save just under $80,000 in interest. Now, why is this important? Well, going back to this $480,000 mortgage, we don't often think as Canadians, and this is part of the debt problem, we don't think about what the total cost is. Typically, Canadians think in terms of payments, right? Like, how much can I get that new RV? How much is it? It's gonna be 380 bucks a month? Yeah, I can do that, right? So we think payment-based. And so because of that, we think, okay, low payments on the mortgage, that's great. However, if you were just to pay this bill every single day for the full 20 years or 25 years of amortization, it would cost you about $780,000. So it's estimated, just about shy of $300,000 of that's going to go towards interest. And so one of the things that we've done is like, hey, if we're refinancing all these deals, let's at least educate the client and put them on a path and give them a strategy so they can potentially get out of this interest faster. And so that is what this calculator does that we've given to you guys. So if you didn't get it, here it is again. Obviously we have some partnerships in financial services as well, so there is an investment component. But what this will allow you to do is if you're sitting down with your clients and they're talking about doing a refinance deal, you could say, hey, listen, this might be something to consider. And it's going to allow you to model out everything, refinancing the debt, get rid of that debt, and then building in that accelerated payment. And then as you do so and play around, it's going to give you those same statistics in terms of how quickly the mortgage will be paid off and how much interest they'll save. And so we hope that it's a valuable tool in educating your clients and painting the picture of the value of undertaking this type of strategy. And happy to answer questions about it after the fact. So I really liked the last presentation about how to introduce this to clients, because that's so much of what we get asked to do is like, okay, how can I talk to my clients about this? Obviously, if you're sitting down with the client, you're reviewing their utilities, a good question to ask is, hey, do you own or rent your home? Okay, you own, awesome. When's your mortgage up for renewal? And they'll say, oh, my mortgage is coming up right away. One of the reasons this is so important, and this is the one statistic to write down, we are in the midst right now, smack dab in the middle of the biggest renewal window in the history of Canadian mortgages. So it's estimated in the next 12 months, 48% of mortgages are up for renewal. So for those of you who are new to the business and hands went up, you're like, who knows somebody with a mortgage renewal? If you know anybody that owns a house, friends, family, clients, cousins, neighbors, if they own a house, half those people are renewing in the next 12 months. And so that's the big opportunity. And as it comes to this strategy here, I just want to point out one thing. There's some money missing. So it's hard to see because we went through this so quickly, but if you have your calculators, 441 plus 27,000 doesn't equal 480. We're missing about 12 grand, give or take. And the reason we're missing that money is because for that particular family, they were so bogged down by debt that they couldn't wait till the time their mortgage came up. They had to jump out of that plane and pull the ripcord. And so anytime you break a mortgage early, there's going to be penalties and fees to go along with that. And so here's the opportunity for this year. We know that half of everyone we know has a mortgage renewal coming up. We know that the average Canadian has $1.84 in consumer market debt. And the last part we know is, good, bad, or indifferent, bad for my kids, bad for all our kids, but house prices have done this in the last 5 years. And so if you have clients who've lived in their home for a couple years, their equity position is really strong. And that's kind of the trifecta for executing this type of strategy at the time of mortgage renewal. Because if we can do this when their mortgage is up, they don't have to pay that $10,000 in penalties and fees. So we're putting our clients in an even better financial situation. So obviously we want you to make warm introductions, and use your, provide your ACN IBO number, use your storefront to submit referrals. I get asked all the time, for sample scripts. So this is the picture to take, the screen to take a picture of. If you are fired up after today and you say, you know what, we want to go do this. This is 2 great ways to reach out to your warm market just to get that ball rolling. And what's going to happen, I promise you what's going to happen. If you send one of these 2 text messages out to 10 people, 1 or 2 of them are going to respond and they're going to say, I wish you would have told me about this earlier. We just renewed 3 months ago. And so I promise you there's a lot of opportunity, but it's just going to be getting out there and just understanding, those in your network who are, have this renewal coming up in the near future. So a couple things we don't want you guys to do, obviously, is we are a provincially regulated industry, so we don't want you to be involved in the mortgage process at all. This means don't give advice. Even though we said, yes, we offer every kind of mortgage out there, unfortunately, it doesn't mean everybody's going to get approved. So we just want to be careful there. Basic rule of sales, don't overpromise. And the last thing is, we can't advertise. And so that's always the tricky thing. We have some internal marketing materials down there to educate you guys, but we can't have you guys going out. And it's because there's rules in Alberta that state that unless you're licensed to sell mortgages, you can't advertise mortgages. I'm at the back. I bought a lot of candy. So if you guys don't come get it, I'm going to be in my hotel all weekend eating saltwater taffy. So I save me from myself is basically what I'm asking. But thank you so much for having me. Thanks, Dom, Jordana. Thank you to the team. Appreciate it. Thank you very much.